all. So I hope everybody's having a great Sunday. And today in this particular webinar that we are conducting, we are going to discuss about our small case portfolio and how we have managed to survive the present market conditions with some pretty decent upsides, even though the overall market and conditions has been bearish. So I'm going to have a walkthrough about a step-by-step process on how we select stocks, how do we manage the risk, and most importantly, when should we actually realize that it's time for us to exit from our stock portfolios, especially when some sort of a bear cycle comes in the markets. So I'm going to focus more on the risk management side, and under such bearish conditions, what shall be done with respect to the portfolio allocation? That is, where should you actually park your capital if you see some sort of a hiccup in the markets? So let's start off, and I'm pretty sure that everyone who is basically going to stay live till the end of this particular meeting is definitely going to have some great value out of it. So I personally request each one of you to stay till the end of this particular meeting, because this is definitely going to be valuable, as I'm going to share the exact same methodology that we follow for our portfolio. So before we start off, or before we kind of actually move further, a very quick intro about us and what we kind of actually do. So I'll start sharing my PPT. So today the topic is momentum investing. So with respect to managing our portfolios, we manage it through managing the momentum. That is, we look forward to entering into stocks that is breaking its 52-week high or all-time high levels, and then holding on to it as long as we feel that there is enough momentum. So a quick intro about myself. So my name is Hari, and I'm a SEBI registered RA. So I started off my career working as a proprietary trader for a European firm called as Futures First. So I'm from the engineering background, and then later on we started off with the firm Livelong Wealth. So we focus both on the derivative side as well as the investing side. So currently we have our offices in Bangalore. We have multiple offices in Kerala, and we are present in Tamil Nadu, Delhi, as well as in Dubai at the moment. So these are the places where we have our physical offices, and our team. We have a pretty big team size. Also, we are more than 130 plus members across all our offices, and we provide walk-ins for clients to come explore our portfolios and then also learn about the portfolios that we manage everything. So these are the bunch of activities that we are into. So not getting much into it. So today the portfolio that we are basically going to discuss is the same portfolio, Livelong Alpha. And as far as our portfolio is kind of actually concerned, I'll just quickly show you on the small case website itself for your better understanding. So with respect to our portfolio, you can actually see that on the small case website or on the small case platform, we actually have three portfolios that is listed: Livelong Alpha Smart Beta, Livelong Alpha Model Portfolio, and Evergreen Asset Allocation Portfolio. So as far as the last portfolio is concerned, this is a passive investing portfolio just to encourage freshers or beginners to get started with their investment journey. This is more or less an index-based investing product, so we're not going to discuss about it. Now we are going to discuss about our top performing portfolio, that is Livelong Alpha Smart Beta. Now, if you ask me what are the difference between this portfolio and the second portfolio over here, is nothing else but the stock universe. So the stock selection process or everything is exactly the same. The only difference is purely with respect to the stock universe. In the case of the first portfolio, we look into Nifty 200 stocks, whereas in the second portfolio, we look majorly into Nifty 100 stocks. So you can see that as far as the performance has been concerned, this has been more, because here though it is Nifty 200 stocks that we follow. And if you kind of have a look at it, even when the market has basically corrected, we have managed to maintain an upside even during this particular phase of correction starting from September 26. The orange line corresponds to the performance of the overall market, that is equity large cap index, whereas the blue line basically corresponds to our portfolio performance. So I'm going to tell you the exact same methodology that we personally follow for managing the portfolios and how we have been able to accomplish the same. So please stay tuned. This is going to be of great value for all of you who stay till the end of the webinar. And for those of you who stay till the end of this particular webinar, I'm basically going to give you some extra benefits that can definitely enhance your trading journey as well as investing journey. So make sure that you stay till the end to get these particular freebies that we are going to offer, and it's going to be of immense value. So stay tuned. Okay, so our outperformance with respect to the market so far has been more than 100%, like almost 100%. That is, you can actually see on the charts. And this is basically what we refer to as alpha. And that is exactly the reason why we have given a name of alpha to our portfolio too. So I hope we can actually start off with the learning right now. Okay. And I hope all of you guys are also very much keen on getting started at this particular point in time. Okay. So let me ask you some questions to start off with. And with that, we'll kind of actually move forward. Okay. So first question that I just wanted to ask our subscribers or our users over here is, how many of you guys actually think that stock selection, like we can cherry pick stocks? That would be a more appropriate usage. How many of you guys over here attending this particular meeting actually kind of feel that we could basically cherry pick stocks? How many of you over here attending this particular meeting actually feel that we can cherry pick stocks? So cherry picking stocks means selecting those specific stocks that can actually do really good. Okay. So I assume that there are many of you over here who feel that, okay, this stock can be selected and I can say, okay, this is the stock that is basically going to move up. People have that particular feeling. So up to a great extent, let me kind of tell you, cherry picking stocks is not something that has actually worked really well, or it's not something that actually works like so good for us. Rather, what works is managing the risk efficiently. That is something that has actually worked pretty much good for us. Okay. So first part that we kind of actually look into in our methodology is we look out to select stocks, and our focus is always on long built up stocks. Okay. That is, we look forward to select those particular stocks that is in a phase of long build up. Why? I'll tell you. So I assume most of you know what long build-up is. Long build-up is a phenomenon where the stock price picks up, and along with the stock price picking up, the opponent is also keeps rising. So this bunch of stocks are what we refer to as long build-up stocks. I'll show you how we do the same process also, but let me first initially give you the pointers. Now the second aspect that we look after selecting these stocks in the phase of long build-up is that we look into the average seasonality of the stock. So when I speak about seasonality, so let's say that I'm selecting a stock Reliance. On average, every swing trade that we take or every stock that we add to our momentum portfolio, the holding duration is anywhere between for 3 weeks to 1.5 to 2 months. Okay. So assume that I'm actually selecting a stock in the month of March. Now I'll see for myself how is usually the performance of this particular company during the first quarter of the financial year in the last 5 years. That is, uh, if I'm to kind of actually look at it, so next month is April. So April, May, June. So how has the stock performed in the months of April, May, June in the last 5 years? That is, if I'm to select a stock Reliance. Because at the end of the day, these companies are also just businesses. And every business will definitely have a phase of time when it will actually do good, and will have a quarter when it doesn't do so good. So we actually validate our trading decision that we select based upon technicals further on with respect to the data based upon the average yield the stock has basically given on specific quarters. So that concept is called a seasonality. So we look into the seasonality for the last 3 to 5 years to validate our decision further. Then our stock selection process is majorly based upon technicals, and we need to know that what could be the minimum risk reward ratio I can actually look forward to achieve if at all I'm basically entering into this particular setup. That is, if I'm selecting a stock like SRF, I'll see what could be the bare minimum risk reward ratio the stock could kind of actually give in terms of the trade that I take. That is, with respect to the immediate resistance level that is nearby to the stock, what could be the kind of risk reward ratios I can actually achieve? Whether this can basically give me something like a 1:2. Only if I can get a 1:2, that is when I basically enter into the trade. Now, the last part I just wanted to point out is any particular stock that we basically add into a bunch of portfolio, we ensure for a fact that we don't exit it at fixed targets. So we never have this particular process where we kind of actually enter and exit a stock at a fixed target. Rather, what we kind of actually do is we make it a point to ride on to the particular trade, or we kind of actually just make it a point to ride on that to that particular stock till the point in time we see a change of character. Now, I assume that some of you must be familiar with change of character. If not, I'll be discussing it moving further. So change of character means if we are entering into a typical uptrend, which is nothing else but a higher high, higher low formation, we hold on to the trade till the point in time we see a lower low, lower high formation happening. So these are some of the fundamental things that we look into our stock selections. So after one more pointer, I will actually go ahead and show you the exact same process with some live examples so that things become much more clear for you. Now, let me just give you an activity. Okay. So we have some good bunch of friends joining in this particular meeting that we are conducting right now. So let me ask you a quick question. So if I'm to ask at this particular point in time, we have almost like 100 people right now live with us. Okay. So can you tell me, uh, just think for yourself, what is your body weight? Okay. So we have 100 people. I'm pretty sure for a fact that almost 75 to 80% of the people, their body weight would anywhere vary between some 55 or 60 kg to 75 kg. That is where maximum distribution of the body weights are going to be for Indians. Okay, so that is how it is. It's not just with respect to this row. Any particular sample set of 100 people you can of actually take in India, the body weights could actually vary anywhere between like 55 to 75 kg. That is the usual average weight of people. Okay. Now, there could be someone who's actually weighing 100 kg. Okay. So, very few people out of a sample set of 100 people, maybe one or two would be there who would actually be 100. There would be some who would be more than 100 also. Now, whatever the number of people who are going to weigh below 45 or below 50, once again, there are going to be less people who are actually going to weigh below 50 kg. So anywhere you kind of actually take this particular concept, majority of the people would actually tend to be alongside with the average. Now, even if you consider the like you kind of consider with respect to height, okay, majority of the people would have the same height. That is, if you're in a classroom, after you filter out the tallest person and the smallest person in the room, it will be very difficult to sort in terms of ascending order because there'll be a lot of people who have similar heights. So this concept applies everywhere. Forget about this physical attributions. Let's speak about the salary that people are earning. Okay, the average salary of people, that is majority of the people who are basically going to live in any particular area, are kind of actually going to be in the average salary slab. Okay, majority of the people who are basically living in that particular area are kind of actually going to be in the average salary slab. Correct. And there'll be very less people who will be earning like extremely high income. There'll be very less people who will be earning extremely low income also, but majority would actually fall in the average. And this is one of the main reasons you kind of actually see that people in India migrating to different places where the average salary is actually higher. So maybe yeah, your work life can be disturbed, everything can be disturbed, your personal settings can be disturbed, but everybody is very easy for anyone to become average. That's the reason why people migrate to places where the average conditions are higher. Average lifestyle is better, average income is better, average healthcare is better, and so on. Same concept applies in the markets also. So why I told you all these particular stories is when we get started with investing into a portfolio, we need to have very realistic expectations. Okay. Now, if we kind of actually take the set of stocks that is in Nifty 200, and if you kind of actually analyze over the last 5 years, that after a stock giving a 52-week high or an all-time high breakout, what is the kind of movement the stock basically gives before the first pullback happening? Okay, in the daily time frame, that is before the first pullback or change of character happening in the daily time frame, in the smallest time in the 1 day time frame or the last 5 years, you would realize that after a breakout of a long built up stock in the daily time frame before the first pullback or change of character that is happening, the kind of movement that we can expect or anticipate to happen is anywhere between 3.87 to 7.85. So let's take it to be 4 to 8%. That is after a breakout. Since we are selecting momentum stock, breakout stock, 4 to 8% move is what we can expect to happen in these stocks. Okay. So my question to you is, In our portfolio also, last year, the biggest winning trade has been around 65-70%, which was in BSE. Okay. So does that mean that I can expect to achieve 70% gains on every trade that I take? Is that possible? It's practically impossible. We can't do that. Correct. We can't expect to achieve 70% move in every trade that we kind of actually take. That's not possible. So average movement, though, we have to understand. So we realize that before first pullback, it is 4 to 8%. So if that is the case, what should be the maximum risk that I should be taking in any specific trade that we take? Assuming that 4 to 8% is just the general kind of movement that can be expected before the first change of character in a sustainable long built up trade. So we come or we kind of actually reduce to a value of 5%. So we make it a point that since majority of the upside moves lie anywhere between 4 to 8% after the first long built up breakout, we should make it a point that our risk is always limited to 5% of the absolute stock price. So that is what we define for ourselves. And then later on, we kind of actually just move ahead. So as I mentioned to you, we make it a point, our max risk associated with any particular trader is limited to 5%. Okay. So these are the basic or the fundamental building blocks of the strategy that we are kind of actually going to speak about. So now let's kind of actually just move ahead. Okay. So let's start off with stock selection only. I'm just sharing my screen. Okay. So at the moment, if you have a look, so this is once again our own tool for selecting stocks, all those things. Okay. So for those of you who are keen on getting access to this particular tool, you can actually just scan this particular QR code and you can actually get access to the same. Okay. So if you want, you can basically get access to this particular tool by scanning this particular QR code and you have a 7-day free trial. Now let me just get back into the tool. Okay, so we're looking at the futures dashboard, and over here our focus is only on long built-up stocks. So at the moment, I see the bunch of stocks that is in a phase of long built-up are BSE, Titagar Rail Services Limited, Emphasis, Poonawalla, Gale. Okay, so BSE, Titagar, Emphasis, Poonawalla, and Gale. These are the bunch of stocks that is basically coming under the category of long built-up. That is nothing else but a set of stocks that is increasing in price, and along with that, the open interest is also increasing. Now you can ask me why long built-up stocks. So long built-up stocks are the ones where OI increases with the price increasing. And due to the same reason, we generally tend to see that if a long built-up stock basically gives a positive side breakout, I'm not saying that it won't give you a false or a failed breakout, but the chances of getting a false breakout or a failed breakout is reducing significantly as compared to a normal breakout stock. That is something that we have observed. And the majority of the times when a long built-up stocks comes out with a breakout, before the volume takes place only, we know that, okay, breakout is happening, the volumes are kind of actually going to be pretty high as compared to something which is going to happen and give a breakout without long built-up phase. Okay, so one thing is the chances of it entering into a false breakout phase will be less. And second thing is with respect to a long built-up stock, I'll just give you a simple example. I say that I'm telling you that you can make 10% returns in this particular stock. Then what do you think about it? You think it is a great stock. But what if this 10% return is coming in a span of 2 years? It doesn't make sense. So generally we see long built-up stocks post giving a breakout, the movements are very rapid. Okay. So that is like we get to know whether it is achieving a target or a stop loss with a very short span of time. So it is like you get to know the results really quick. So it is more or less like try fast, fail fast. So you can try fast and you can fail fast or win fast with the help of long built up stocks with respect to their targets or stop loss. So that's the reason we look into long built up stocks. So BSE, Titagar, Emphasis, Poonawalla, Gale. These are the bunch of stocks that we are kind of actually looking at. Now, one by one, let's kind of quickly have a look at the charts of these stocks. So let's start with BSE itself. Okay. So Bombay Stock Exchange. I'll also show you. So right now the stocks that we're looking at we're looking at the stocks for the next week. And as far as the process is concerned, our process is like pretty much systematic or system oriented. So we look for fresh stocks on Saturday, Sunday after the market has closed on a Friday. And all our entries happen on Monday. Our entries always happen on Monday Okay. And Mondays, we are not getting entries, so we're not going to enter for the rest of the week. So Saturday, Sunday, we basically watch out for the fresh watch list for the next week. Monday, we enter. Monday, so we're not getting an entry, so we're not entering. And then later on, for the entire week, we basically look forward to see if there is any stock to exit, hitting our stop loss, trailing stop loss. That's the only thing that we'll be doing. So no fresh entries after Monday also. So BSC's chart, this is the daily time frame. So let me just quickly observe the charts. So I know that BSC at the moment, after a correction, not just BSC, almost all the stocks, it's approaching back to a resistance level. So this was a resistance earlier, later on. So the daily time frame chart, later on, it is basically acting as a support. Now, I personally feel this level will continue to act as a resistance. So if at all I'm to go for a buy in BSC, let me quickly see how I'll have to define my risk. Okay, I'll have to look forward for this particular trade on Monday. Once the high of this particular getting broken, which would be my entry with my stop loss at the low of this particular candle, assuming the moment will actually go towards the next resistance level. In this particular case, the next resistance level would come somewhere over here, pretty much close by only. So until unless this level is getting broken, I don't see room for upside. Now, even though if I had a favorable risk reward ratio till the next resistance level, the risk associated with this trade would be at the low of this particular Friday's candle. The entry would be at the high of the Friday's candle on Monday with your stop loss at low of the Friday's candle. So what would be the risk? The risk is going to be 8.6%. So as per the bell curve, we have actually observed that we should define our risk to max 5%. So it is not that if you take a 8% risk, the trade can't give you 16% or something. It can give you. But majority of the times, the outcome of the trade would lie anywhere between 4 to 8%. That would be the first probable move before the first pullback on a Nifty 200 universe of long built up stock. Due to the same reason, I'll just confine myself for only those setups where the risk is lesser than 5% or nearby 5%, maybe 6% and all is fine. So here the risk is high and the first probable move would come to the next level, which lies somewhere over here, where once again, I'm not going to get a favorable risk reward. So the risk to reward is like, risk is like twice the reward over here, so vice versa. So I'll check this particular trade. BSC, I'm not interested or keen on looking at. Now, the next stock that we see is Titagar Rail Service Limited. So with all the examples, you'll get better clarity. So let's have a look at Titagar Rail Services. It's a railway stock. Sorry. Yes, sorry, Titagar Rails Systems Limited. Okay. So with respect to Titagar Rails Systems Limited, this is basically how it is. It's forming almost like a double bottom. And right now we are kind of actually approaching a neckline. In this particular case also, if I'm to kind of actually just look forward to be taking out a long setup, I had to enter at the high of this particular candle. Okay, that is the Friday's high with my stop loss at Friday's low. And the next significant level in this case looks like somewhere here. So risk reward would be there if the price is to give a breakout from here and give a move towards the next level. So we have more than 1:2. We have like almost 1:2.3 risk reward ratio. But the bad part over here is the risk associated with this trade would almost be 7%. That means I need a 14% move in my favor, which basically comes towards the right end of the bell curve in order to achieve my desired target. So Titagar Rail Services Limited, later on we look into. Anyways, BSC though we can't look because risk is 8%. Here it is 7%, that is 1%, 2% more than our permitted risk of 5%. Now let's get into the next stock, which is Emphasis, which is also in a phase of long built up. So as far as the stock Emphasis is basically concerned in this particular scenario, so here also it finds a good support over here at the bottom. And now if I'm to kind of actually consider going for a buy position in this particular case, the next major level would come somewhere over here, which should be at a 1:1. Now the risk associated with this trade is 8.54%. That is like I need to achieve 17% move to achieve a 1:2. So straight away can eliminate this stock because chances of a 17% move as my first probable target is like less. And another thing is the resistance comes at 1:1 only. So I don't think we should pursue this at the moment. Now let's get into the next one, which is Poonawalla. So let's look into the stock Poonawalla, which is also coming under long build-up. So Poonawalla, if I have a look at it, this is the chart, okay? And in this particular scenario, if I'm to mark the levels, this is a scenario once again where the old support is basically being converted to our new resistance, okay? So old support is basically being converted to our new resistance. So here, let's have a look at the risk. The risk associated with the trade is like 5.8%, which is like just 0.8% more than what is our permissible risk. And currently the price is holding at the old support, which later on converted to the resistance. Now, again, this level is basically acting as a resistance. Now, if there is an upside move that is possible, here the next level would actually come and we can achieve a 1:2. So Poonawalla is one stock that almost satisfies our condition. Stock is in a long build-up. It is basically at a significant level. If the breakout is happening, achieving 1:2 is also possible in the case of this particular setup. So more or less all the factors that we are looking at is kind of actually being satisfied, or the conditions are basically being like being sorted out in this particular case. That is what we see with Poonawalla. Now we'll have to have a look at the seasonality. Now we'll look at the leg stock, which is Gale. So one thing to notice in Poonawalla also the risk is exceeding 5%, by the way. Now let's have a look at Gale. So if I look at this particular stock called Gale, this is the charts. Okay, stock is in a long build up. Currently, it is basically at a situation where the old support is kind of converted to new resistance. Okay, price has been playing around this level before also. Here also, after a double bottom, from there it has managed to pick up. Now, if I'm to kind of actually devise a trading setup over here, this is basically how it would go. I'll have to go for a buy at the high with my stop loss at the low. So the risk associated with this particular position, if I'm to go for a buy at the high with my stop loss at the low, would be somewhat like this. That is like with a 5% risk, my first probable target or the next major level would be somewhere over here. Okay, so this would be my first probable target. Like next major level would come somewhere over here. This region. In fact, like see, these are, to be very honest, these are actually regions more than levels to be specific. So the next level would kind of actually come somewhat like this. That is, if I'm to go for a buy on Monday at the high with my stop loss at the low. So the immediate level or risk reward actually comes to almost 1:1. Okay, but the risk is here though is basically limited to, yeah, risk is limited to like 5%. Risk reward kind of actually comes to 1:1, which would be my immediate like with respect to the immediate levels. Okay, so out of all the stocks that we have screened for so far, the two stocks that we kind of actually see is coming within our conditions. That is, it's in a phase of long build up. Now, stocks that basically factors in decent risk reward ratio. The risk basically comes below 5%. We see that's only Poonawalla and Gale. Okay. So now let's kind of actually just move ahead and see the seasonality of these stocks, that is Poonawalla and Gale. Okay. So for that seasonality, as I mentioned to you, once again, a simple intro. So if I'm to kind of actually ask you which business would do good during summer season, is it an ice cream shop or is it a popcorn shop? All of you would say ice cream shop, correct? Summer season. What about winter season? Would it be an ice cream shop or a popcorn shop? During winter season, on the other hand side, it is basically going to be a popcorn shop. So what if I own both the businesses? Both the season, I have businesses. That is, if I have both an ice cream as well as popcorn shop, then both the seasons I'll be able to make money. Correct. So the purpose of looking into seasonality is that just like anything else, stocks are also at the end of the day businesses, and we need to know the specific quarters where the stock has a higher tendency of performing well. So now when we are selecting a stock, Jan, Feb, March is almost done. We're selecting stocks for the first quarter of the financial year, coming financial year, correct? So it is very good that we get to know or we understand for ourselves how these stocks have managed to perform in the past with respect to the first quarter of the FY. So we'll give more emphasis there. So let's have a look at the seasonality. Let's have a seasonality check with respect to the stocks. So quickly, I'll have a look at BSE. all these things. BSc, as far as BSc is kind of concerned, okay, I think BSc data is all that. Emphasis. See, we're not keen on emphasis and all. Emphasis, yeah, on average, April months have been positive. May has also been positive. June is generally a negative month for emphasis. So BSc, emphasis, and the other one was Titagar. Titagar, I think that is not it. So yeah. So now let's get into the stocks that we have shortlisted, which is Poonawalla and Gale. Okay, so let's have a look at the seasonality check. Okay, so Poonawalla, I think data is not yet visible. Okay, Poonawalla we don't have. So let's have a look at Gale. So Gale, if I have a look at Gale, okay. So how, as I mentioned to you, our average holding duration varies anywhere between 3 weeks to 1.5, 2 months. That is, if I start right now, probably I'll be holding it till the end of April or till the mid of May. So let's see on average, how is the performance of the stock Gale in the month of April, May. Okay, I see that it seems that for the stock Gale, April seems to be the best performing month of the year. Okay, now if I see for the last 5 years also, always April month has been a month where the stock actually performs really well. So based upon this particular data or based upon this particular inference, I can actually say, yeah, data wise also, April kind of actually seems to be a great performing month for the stock. So if all other conditions are satisfying for me to trade, the seasonality factor is also an extra confluence for me to go ahead with the trade. So this helps me validate my decision further on entering into a position in Gale for the coming week. Okay. Now, alongside with this, I also spoke to you regarding Poonawalla. Poonawalla, unfortunately, the data has not been added to the system. So I'll be adding it today only. So Poonawalla also will do a seasonality check. On a similar note, we'll kind of actually take up a decision. Now let's take a random stock just for our observation. Let's say by any chance DLF was a stock that we had to kind of add to our portfolio. It was satisfying our conditions. Let's assume. I see that April and June are negative months. That is April, May, June. May is only positive month of the first FY quarter, but April and June are generally negative months. So it doesn't make sense for me to add DLF. Even all other conditions are satisfied. I won't give priority here. Now, with respect to Gale, seasonality wise, this particular data is good in my favor. It makes more sense for me to give priority to the stock. So now with this particular thing, I just want to conclude with the fact that out of all the stocks that we have selected, watched out for, BSC Titagar emphasis and all, the risk is actually more than like 7-8%, which makes it difficult for me to achieve my first probable target of 1:2. Whereas stocks like Poonawalla and Gale, the advantage or the plus point is that the risk reward can be achieved in a more comfortable manner, simply because of the fact that these stocks kind of actually come lesser than like 5% risk or just 5.5, 6% risk. So achieving 1:2 is like fairly much more easier. So these would be the stocks that we would actually narrow ourselves down to by giving more focus. Okay. So tomorrow, that is on Monday, we'll wait for situations when Poonawalla is basically breaking the Friday's high or Gale is breaking the Friday's high. So as soon as the Friday's high is basically getting crossed itself, we'll go for an entry with our stop loss at Friday's low. So with respect to exit, what we do is we wait for the candle to close below this particular level at the end of the day. Only if the closing is happening at the end of the day, then we take out an exit. So this is exactly the same process we actually use for our stock screening and entering process. And now let me just move forward to tell you the last three entries that we took the previous week. Okay. The previous week, we had actually taken some entries. One was which in SRF. Okay. So SRF is one stock that we entered the previous week. So on March 9th was our last entry. So this was a stock that was in a long built up approaching a all-time high level. Okay, so we went for a buy at the high that was over here, 2943 with a stop loss at the low, which is at 2837. So you can see the high is getting broken. We went for a buy with a stop loss at the low. So currently the trade is running and at the moment we get something like a 1:1. So after 1:1 risk reward ratio, what we do is we can actually trail the stop loss to our entry so that the trade basically becomes risk free hereafter. We don't have to take any risk in the trade hereafter that we make the trade risk free. So SRF is one trade we took. And as I mentioned to you, even after achieving 1:2, we are not going to take out an exit. We'll hold on to the trade till we see a change of character. So when I say change of character, what I'm referring to is at the moment, the stock is basically looking bullish, right? So it continues going bullish like this, forming continuously, forming higher highs. Let's say at any particular point in time, it starts forming lower lows like this. That is when we see that, okay, there is a potential reversal in cards and that we have to take out an exit. So till the point in time, we see higher high, higher low formation or continuous uptrend, we are not going to take out an exit. We'll continue holding to the trade. Only once we see change of character, that is when we are going to take out an exit. So since 1:1 is given, we'll make the trade risk free. That is, we don't have to take any more risk in this trade. The other stock which was in a long built up and gave a breakout similarly was Adani Total Gas, which was our last previous entry once again on March 9th. Okay. So as far as this particular stock is concerned, let me quickly show you. Here also the entry was on March 9th. Okay. So this was what we were kind of actually looking out for. Okay, March 10th. Okay, my bad. I have it on the PPT also. I just added it for you guys. So once again, in order to use our screeners, scanners, all those things for a 7-day period, you can scan this particular QR code and make use of the same. So Adani Total Gas. Yeah. So this 607, just take it out. So Adani Total Gas, this was once again the previous bunch of entry. So you can see over here, in the case of Adani Total Gas, the risk associated with the swing that we kind of actually took for ourselves was like pretty much nominal. It was like very less. So the risk associated was just 3.3%. That means we need a move of almost just 6% for us to achieve 1:2. Okay. So as far as Adani Total Cash is concerned, we entered over here with our stop loss at the low. So 2 days after our entry, we had a situation when the candle crossed the low of our entry candle on Monday. However, it never gave a closing below the low. Okay, so with respect to Adani Total Gas, if you kind of have a look at it, there was a day when the candle basically crossed above the entry, but the candle never gave a closing below the low. Now, since the candle never gave a closing below the low, we didn't take out an exit. So our exits will actually happen only when there is a closing below the low. Here we see that there is no closing below the low, so we didn't take out a exit. So we basically bought it. We held on to the particular trade because no closing was there below the lower levels and we continued to hold it. Now again, the price is actually up. Currently, the price is basically trading at almost 1:1. That means in the case of this Adani Total Gas also, at the moment, we can actually trail it to cost. Means after a 1:1 move, we can make the trade risk-free. So that now, even if the market is to correct, we have zero risk or nil risk associated with the position that we have entered. Okay. So I hope this is also clear. So this trade is also made risk-free. SRF is also made risk-free. Apart from this, other trade that we have actually entered was this thing, Apollo Tires. So Apollo Tires, once again, let me just quickly show the charts. Here also the entry was on March, this thing, after March 7th, March 10th, my bad, March 10th. 9th was Sunday, March 10th. So March 9th was when we selected the stocks. So March 10th. So as I mentioned to you, after the market closes on Saturday, Sunday, we do our stock selection on Saturday, Sunday. And then we do our entries on Monday. So hardly in a week, you have to spend like 1 hour, including monitoring your positions, selection of stocks, everything. Hardly 1 hour is what all you need to spend for this entire process. So Apollo Tires, this was the case. Your risk was just 4%. And for 1:2, the kind of movement that we need is only till here. Like you just need a 7.5% more. So in this particular trade or in this particular setup also, all you needed is just like a 7.5% more in order to achieve like a 1:2 this thing risk reward ratio. We entered at the high over here on Monday with a stop loss at the low. So just like for around like 5 days after the day of our entry on Monday, we had a situation when the low of Monday's candle is getting breached. But as you see, never ever candle is closing below this level. So as I mentioned to you, with respect to entries, on Mondays, our entries will happen exactly when the high of the candle is getting crossed. Okay, exactly when the high of the candle is basically getting crossed, our entries will basically happen. But with respect to the exits, as far as the exits are kind of concerned, exits will actually happen only when the candle is closing below the level. So till the time the candle closes below the level, we are not going to take out an exit. So I hope this part is also clear. So now if you have a look at it, as far as Apollo Tires is concerned, it is trading at a risk reward of almost 1:1 it has given. So here also, like, you can consider trailing into the course. That is, here after this particular trade, you have no risk on the table. So you are absolutely risk free as far as this particular position is also concerned. So I told you the last three entries that we kind of actually took, and that is Apollo, SRF, and what do you say? Adani Total Gas. And apparently in all these entries, we have managed to be risk-free, so that no more risk associated with the positions hereafter. And we can continue trailing onto those positions after 1:1:3, as much as it goes, till the point in time, we kind of actually just get a change of character. So that's what I was telling you. So till the point in time, you kind of actually get a change of character in the particular trade. You can hold on to the trade. So obviously, you guys need to know one particular thing, that is not just about entering the trade, but coming out of the trade is something which is most important. Okay, coming out of the trade is something which is actually most important, coming out at the right time. And it's practically impossible for anyone out there to predict what is the top of the market or what is basically the bottom of the market. So in this particular approach that I mentioned to you, always we are limiting our risk to just 5% of the absolute price of the stock. And another pointer I wanted to do is how we do the money management is that if I have, let's say, 1 lakh rupees to invest, I'll split my capital into, like, let's say 10 parts. Okay, if I have 1 lakh, okay, better you split it into 5 parts. But when we do it, we are assuming it for a larger sample set, that is like of 10 lakhs. So we divide the capital into like 10 parts. So that is like 1 lakh each. And every subsequent stock that we are basically adding to our portfolio, we'll be allocating this 1 lakh rupee with a max risk tolerance of 5%. So even though the entire stocks that we have added, okay, is basically hitting a 5% hit, market is crashing. Probably our downside would actually be limited to be nearby 5% only. So the max loss that will be incurring is going to be 5%, correct? But with our approach, how we enter is, as you know, that right now we have just two stocks to watch for tomorrow. So tomorrow, if you're starting off with our portfolio, you'll be just adding which all stocks. Max to max, you'll be getting entries in two stocks, provided that the high of Friday is getting broken. Out of two stocks that you're watching, maybe only one stock you're getting an entry. One stock Friday high is not getting broken. Then the stock is chucked. You'll be coming back the next week only, correct? So in our approach, the best part is we'll be entering into the markets in different market cycles. So next week, maybe market might be sideways. So you're entering maybe two stocks there, where 20% of your capital is going to be allocated. Then the week after that, again, you'll be entering into two stocks or three stocks, where maybe 30% of your capital is allocated when the market was extremely bullish. Now, the week after that, maybe the market is extremely bearish. There also will be entering just maybe two stocks where another 20% of your capital is allocated. So the best part about our strategy or our methodology is that you are basically splitting your capital into different chunks, and then kind of actually taking up positions in such a way that your average entries are always phased out across different conditions of the market cycles, which will basically give you an edge that even if the market is to correct suddenly, you'll be having only some stocks hitting your stop loss soon after the entry, whereas majority of the other stocks would probably hitting their trailing stop losses, or maybe will be kind of actually coming out some profits because you were just holding on to it even after it achieved your 1:2 targets. So this is a method where you split your capital. Our entries are going to be split into different parts depending on the opportunities that come up every week. And we are not going to go all in at once. So anyone who's starting a fresh portfolio, that is today, if you're subscribing to our portfolio, you're basically going to be entering your full portfolio over a span of 1.5, 2 months with this same process that I have mentioned to you. Okay, so that you get the benefits of the average of different cycles. And another aspect I just wanted to tell you is that another beautiful part about our portfolios. Now, let's say market starts correcting, we'll be hitting this 5% stop loss limits, and then we'll allocate our portfolio into two uh, products, which basically diversify the risk under correction. That is nothing else but gold as well as debt instruments. Now, I'll just tell you how do we decide the market phases. Okay. Now, for those of you who stay till the end, we have something special. So make sure that you stay tuned and watch it till the end. So the last part of this particular session is how do we decide a market cycle? Okay. So at Livelong Wealth, we have basically one of the mechanisms that we personally use for custom screening for the market cycles is this particular indicator. Okay. And this is nothing else, nothing so complex. It's just an EMA crossover. So if you have a look over here, you can basically see or figure out for yourself that our custom indicator is basically giving us a sell signal starting from 24th October. Okay. That is starting from 24th October, it is showing you a short signal. That is market is in a bearish cycle. Whereas if you have a look at this particular phase, that is from 2nd November, sorry, 20th November 2023, our markets has been a bullish cycle. So we look at the market cycles. Okay. So as far as our swing positions are concerned, we look forward for entering swing positions only when the market cycle as such is bullish. The market cycle as such is bearish, then we are not so keen on entering into swing positions aggressively. Okay. So once again, I'm just pointing out this particular aspect to you. Okay. If the entire market cycles, okay, so as far as the market cycles are concerned, we look into what a market cycle is. So from 20th November onwards, the market cycle was bullish. So this was a point in time or a period in time when we were aggressively adding swing stocks to our portfolio. However, if you have a look at this particular phase, that is post 24th October, the market has been in a sell cycle or a bear cycle where we are not so keen on entering into fresh swing stocks. Okay. So this is another aspect I just wanted to point out. So right now also the markets is basically in a bear cycle. However, corresponding the fact that the markets have corrected a lot, this is simply the reason we kind of actually started adding back some positions, even though the entire markets as such at the moment is also in a sell cycle or a bear cycle. So now this is our approach. Okay, so this is basically the methodology that we ourselves follow with respect to the stocks, with respect to the portfolios, all those things. Okay, so now if you guys basically want, okay, to make use of the same portfolio, okay, if you guys basically want to kind of actually just make use of this particular approach, you too can actually just be a part of our momentum investing portfolio. You can also make use of the same. And I'm just giving you one particular coupon code that is LLW Invest. And this coupon code is only valid for the next 10 registrations. Okay, just for the next 10 registrations. You can just Google Livelong Wealth small case or directly on the small case platform itself. You can just search for Livelong Wealth Alpha portfolio. I'll just quickly show you the process. You can basically come to the small case website. Okay. And over here, you can just click on discover. And over here, you can basically search for Livelong Wealth. Okay. And you can see that Livelong Alpha Smart Beta. This is our top performing portfolio. So if you just come here, they're basically asking you to log in to continue. You can just log in. Okay. And over here, if you just subscribe to our product and just enter the coupon code, as I mentioned to you, the coupon code for the product is going to be LLW Invest. Okay. And you can get a flat 30% off. Okay. You can basically get a flat 30% off on our subscription models. And somebody can actually get started with a capital as small as 25,000 rupees in order to invest with our portfolios. So you can make use of the same. So this offer is basically going to be valid only for the webinar attendees. That is only for the first 10 registrations that we are going to get from today's webinar. You'll be able to make use of 30% off. And from time to time, there is every week, whenever there is a new stock that is being added or a new stock that is like a stock that is being exited from the portfolio, we keep on updating you along with the logic, along with the reason for the entry, along with the reason for the exit. All those things will be updated to you. And we have a very vibrant community for all of you guys to come and discuss the trades also. That is, we maintain a community on Discord where we basically discuss regarding all the stocks that we kind of actually add. Okay, every stock that we kind of actually add, every stock that we kind of actually discuss, all those things. We kind of actually just discuss with our subscribers. Okay. So you guys will also be added to this particular vibrant community where discussions, everything happen, so that you are always in touch with us and you always stay in the loop of why so and so stocks has been added. So we have a pretty vibrant community of almost 5,000 plus users on this place. So you will also be added here, and this is definitely going to be an added benefit. So you can just go to like small case website, or you can just Google up Livelong Wealth. Okay, our company name is Livelong. You can just Google up Livelong Alpha Smart Beta portfolio and subscribe right now to get this amazing benefits. Along with that, for those of you who are registering today, I'll be giving you guys access to this custom indicator, uh, the codes, the exact same codes of the custom indicator that we kind of actually have, so that you can also get this particular codes and you can further use it for your own analysis, everything. Okay, you can basically use this particular custom indicator for your own analysis. I'll be sharing the trading view script with you. And along with that, as a freebie, we'll be giving you a trading view Pine script development session for the new subscribers coming in, so that you get yourself introduced to a little bit of algo trading and systematic trading approach too. Okay, so make use of this opportunity. And I hope whatever I have conveyed is kind of clear for all. So any quick questions or any queries that you guys would have based upon whatever I had discussed with you at the moment, you can always feel free to ask me right now. Okay, any questions or any queries, you can actually just ask me at the moment. I'll be more than happy to answer. Any questions that you have, I'll be more than happy to answer. Okay, so I think we are getting some questions from the users. Okay, so let me kind of start off. Okay, I think we are basically getting some questions from the users. Yeah. So our friend Maitreya has asked, like, what are the frequency of the rebalance? Okay. So Maitreya, like, as far as the frequency of the rebalance is concerned, as I mentioned to you, our entries are basically happening on Mondays when the highs are getting broken. So either after our entry happening, straight away it should come down and hit the stop loss. Okay, straight away it should either come down and hit the stop loss. That is one case where we'll be looking for a fresh stock to add. Other scenario is our trail stop loss is happening because of a change of character coming in or a correction happening in the market. So only under such situations we'll be adding fresh stocks. Now, if the market is entering into a bearish cycle, then our usual allocation would go like 30% into gold and the rest 70% into debt instruments. That is post all our stocks are being hitting the stop loss and the entire market entering into a bearish cycle based upon our custom indicator. Okay, what are the top sectors to invest for 4 to 5 years and the reasons why you're bullish on them? Okay, now as far as this particular question is concerned, I'm not someone who looks and invests specifically into a sector. I look into the entire Nifty 200 universe and there I look out for momentum. I'm not someone who invests for 4 to 5 years duration and wait and hold. So that is not something that my approach is. So I wouldn't be the right person to answer. So I can answer you based upon what I do. There are multiple other SEBI registered investment advisors and research analysts who are follow this approach. So it's better that you consult with somebody who takes an investment horizon of 3 to 5 years. I'm not that person, so better I don't like mention it because that's not something I follow. No, so I practice what I preach. So you can ask me anything related to what I do. Informative, sir. I would want to stick up same portfolio for like with portfolio for 10 years as with mutual funds. Would the small case will have? Yeah, definitely, of course. So our friend is asking like the small case have a long-term monitoring. Yes, so that's what I was showing you. So if you have missed that part, if you basically come and just see, just kind of actually just Google up. Okay, Livelong Wealth small case. Okay, you can actually see for yourself that the like 3 year, that is from the time we have the product listed on the platform, you can actually see this performance, right? So this is for the 3 year CAGR. Our 3 year CAGR has been like 39%, 39.55%. Just a quick disclaimer. These past performances are not any indication for future performances, but yeah, definitely you can actually see this over here. So long-term performance can be seen. Okay. So for some of you guys are asking our contact number. So this is our contact number 8921136561. You can actually just WhatsApp. Okay. You can WhatsApp or call also. You can either WhatsApp or call on this number 8921136561. We are more than happy to help you. Okay. So yeah, long-term performances can be tracked on small case definitely. No questions on that. Now after that, we are kind of actually getting a question from Prab 9871, the bell curve standard normal distribution. Yes, standard normal distribution, bell curve basically takes care of that only, plotting the distribution. Because many times when people get started in the markets, okay, because many times when people kind of actually get started off in the markets, the challenge that they face is they seriously don't know what is a realistic expectation to watch out for and what is a unrealistic expectation to watch out for. Okay, so setting up realistic expectations is very important. Okay, so due to the same reason, best thing for you to kind of actually do is understand on average what are the kind of movement the product has like the product that you're watching out has given. Okay, so Pratima case area is asking if a small case is not giving more than 25, looking to rebalance and fees, then looking to see, now the thing over here is there will be market cycles when the stock is actually like entire markets are doing bullish, entire markets are going bearish. So the question over here is alpha. So to Pratima, let me ask you this question. You're putting, let's say you're generating 20% returns from your investment portfolio in the markets. But what if that particular year Nifty large cap has given investing into large cap stocks, you generated 20% returns in a year. What if that particular year, large cap stocks, Nifty large cap index itself has given you a 40% returns? So then is your 20% returns great? No, correct. Why? Because in Nifty large cap index itself has given for, I'm just giving an example. Okay. Nifty large cap index has itself given 40% more and your portfolio is giving 20% more. So it doesn't make sense. But what if when Nifty large cap index is giving 10% more, your portfolio is basically generating 30% more? Then it is great. You have outperformed the large cap index by 20%. So that is what we refer to as the alpha that you're generating. So that is what I told you initially itself. As far as our portfolio is concerned, from June 13, if you invested 100 rupees with us, today, as of date, it will become 248 rupee. Whereas if you invested the same 100 rupee in the Nifty large cap index, it would have become 149. So that is our outperformance with respect to the market has almost been 100%. That is by a factor of like we have outperformed the market by 100%. Okay. So here also you can actually invest in an SIP model where systematically every month you invest a specific amount of money into the portfolio. That can also be done. So in terms of SIP model also we have outperformed the overall markets by a very good factor that can be done. Okay, so even when the market, so this is something that everybody used to mock us. To be very honest, mock us. I don't mind saying. People say when the markets are bullish, everybody will make money. Then why are you saying that your portfolio has this system, that system, and all? That is, whenever we used to conduct such kind of webinars in the past, everybody used to say, ah, now the market is moving up, so your portfolio is doing good. Everybody makes money when the markets are up, correct? That is what everybody used to mock us or say. You are making money only because the market is bullish, not because of your skill or not because of your talent. So now, to at least I can say something because since we have a bearish cycle right now, just have a look at the bearish cycle that is happening in the markets at the moment. So markets have been bearish. It has corrected starting from September 26th. The market has been correcting. So you can see September 26 to almost October, like till November 11, we also, our portfolio also corrected, correct. But as I mentioned to you, our systems, overall market condition system has started giving us sell signals from 25th October. That means we realize it is time that if stop loss is hitting right now, we should not add fresh stocks. Rather, we should diversify our portfolio into gold and debt instruments. Then later on, we diversified our portfolio. During this time, what happens? Our portfolio started picking up again, even though the overall market started falling. So knowing when to exit is very important. So now though nobody says we are making money only when the markets are moving up. Even when it falls down, we are able to perform. Okay. So I hope I answered your question on that, Pratima. So the question is with respect to alpha. So we had the Sharma ji ka beta comparison. If your neighbor son is scoring 100 out of 100, you have a problem with your son scoring 40 out of 100. But if your neighbor's son is also scoring 40 out of 100 and your son is scoring 50 out of 100, then it's great. Correct. Because it's always comparative. There should always be a benchmark for performance also. So we compare with respect to the overall market. So if you're generating something better than the average or the benchmark, that is when you're considered to be good. And that is when it makes sense for you to take all the extra effort. So I hope you answer your question. Okay, is now a good time to start SIP or make lump sum investment? See, it's always a good time to start investing. Okay, it's never a bad time to start investing. It's always a good time to start investing. So that's what I said. So right now, even though the market is in a bear cycle, we started entries because we feel this is a good level to enter, and phased out, we are actually entering. And in the process that we personally follow in our portfolio, we don't have a go all in at once approach. Correct. So right now, we have like around just 30% of our portfolio allocated. Okay, the rest is still in debt instruments and gold. So gradually we'll shift the allocations depending on the market coming into a bullish cycle. So if there is a crossover happening over here, market coming into a bullish cycle, then we'll actually have our allocations happening purely into stocks. Till then, gradually phased on manner, so we'll keep entering. Okay, so always a good time to start investing. And with a product like ours, your portfolio is distributed across stocks at any point in time, like 10 different stocks, and then debt instruments and gold also. So it's like perfectly it's a all-weather portfolio. Okay. So I hope I answered that question also. You are amazing. Thank you, Akhilesh. Uh, are you concerned about the global economic uncertainty and geo strategic crisis? See, I'm concerned only about things that is in my hand. Okay, things that is happening across the world, things that is happening across the industries, all those things. These are things that is not in our control. So I am personally somebody who believes that the only thing that we can control in the market is a risk that we take. Correct? That's the only thing that is ultimately there in our control. Everything else is basically external. So there is no point in us like being concerned about all the external things, because if you are that person who concerns over external factors, then your entire life you'll sit concerned only, because every day you have something or the other happening, right? So markets is always like this. So today if you have something happening, so you have, see now, for example, LLUV bench, Love Bench, I think, yeah. So Love Bench has asked this question on a very broader aspect about the global economic uncertainty and geostrategic crisis. Tell me one particular month when there was no global economic uncertainty and geostrategic crisis happening in the last 10 years. Tell me one specific month when everything was good everywhere in the world. So this is life and this is the world. So it's always going to be like this. Markets are also always going to be like this. So if you start getting concerned about everything, no, our entire life will sit concerned only. We won't do anything in life. So focus only on things that is in your direct control. That is yourself, your risk management, your mental peace. Okay. And risk management is the most important for all these things to happen, because we should know when to exit, how much to put at stake. As simple as that. There should be a limit, or there should be a control over everything that we do. So focus only on things in your control. Don't focus on anything else. Is this a weekly rebalance small case? See, this is not a weekly rebalance small case, Pranav. Whenever we have an opportunity, we have an entry. So I can't define that every week we have an entry. I can't define that every week we'll have a stop loss. So for example, during the bull rally, there was time when we didn't have to exit any of our stocks like for a span of like 2, 3 months. That can also happen. We didn't have to enter any fresh stocks, because all of our stocks that we entered, after achieving a target, it was going on 1:2.5, 1:3, 3.5, like that it was going. So no change of character was happening in any of the stocks, because of which we didn't have to exit anything. So this is a system. This is a purely a system-driven approach where we focus on riding the trends as much as possible and coming out only on those which shows us a reversal. Okay. So LLW invest. So as far as our this thing is concerned, okay, as far as our coupon code is kind of actually concerned, LLW invest is the coupon code. You can actually make use of the same, and you can actually get 30% off on all the portfolios. So I'm just sharing the link. Okay. I'm basically sharing the link too for you guys. Okay. Will you be able to recover? Okay. So Prashant is basically asking, like, will you be able to recover the small case fee with 25K capital? So that's a very skeptical question that you have actually asked. See, the minimum investment amount is to 25,000. Okay. And now if you kind of actually consider maybe the annual fee that you will pay would actually account to almost how much? I think it's 5K for a year. So that means for you to kind of say our CAJ has been around 40%. So 40% of 20K is how much? If you kind of actually consider 40% of the 20K that you kind of pay is like 8K is what you'll be making. So I'm assuming that by starting, say 25K minimum investment amount over here, which is basically mentioned is for someone to start off with. Nobody's asking you to invest 25,000 and sit for the rest of your life. Okay, so just ask with 25,000 rupees investment, even if you are compounding at 40%, if you're going to put only for 25,000 for the rest 10 years of your life, whatever returns come doesn't make any significance for you. Assuming we are able to compound to double the capital in every 2 years, so your capital probably becomes 1 lakh rupees after 6 years. Obviously, you'll be able to recover for the fee, but you are not doing this to recover the fee. No, you're focusing on the portfolio to compound your wealth. So obviously, you should keep on adding capital, keep on investing on a systematic basis. Okay, I hope I answered your question. That was an unwanted question, Prashant, but still I answered it. So with 25K, nobody is going to get wealthy. Correct. Just holding 25K for the next 10 years. You should keep on investing. That's where the power of compounding comes, and that is basically where models like SIP, all those things are going to benefit you. Okay. So we have basically touched upon almost all the question. Okay. And I hope I have been able to add some value to all of you. Any questions or queries, you can feel free to get in touch with my team. Yeah, and I think that's pretty much about it. So I hope all of you have a great Sunday ahead. And I hope that I have been able to add some value to all of your trading and investing approaches too. So thank you all. Have a great day. I think it's time for us to wind up. It was a very productive 1 hour session with all of you. Thank you. So you'll be having the link of a small case in the YouTube description, so you can make use of the same. Okay, so in the link of the YouTube video, you'll be having in the description, you'll be having the link of our small case subscription, so you can make use of the same. Thank you.